Hatem Dhiab. This is a bull-bear debate. Hatem Dhiab, managing partner, Gerber Kawasaki Wealth and Investment Management. Gordon Johnson, CEO, founder, GLJ Research. Thank you both for being with us. Hatem, you've been on with us so many times. You always say don't bet against Elon. While you don't give exact price targets, you certainly give the trend, and that is that you're a believer in Tesla and its stock. In the meantime, Gordon has basically a $24 target and a sell rating. So Gordon, hold on. Hatem Dhiab, what did you like about Tesla and why do you see this growing?
Hey, Nicole, thank you for having me. Listen, it was a great report. They've reached $25 billion in revenue, almost at least. So they're like a $100 billion run rate. That's a very exclusive club to be on. Margins are good. I expected them to be a little bit less, but they came in at 18%, so that's also very good. And really, they're growing fantastically well, almost 50% top line. So I don't know what's bad in this report.
Okay, so the first thing that Gordon's going to say is about the margins. And Gordon, keep it short so we can have a nice discussion. Go ahead, Gordon, and let's hear your thoughts.
All right, so I think where the bulls are dead wrong is in the auto industry, you had a temporary chip and supply chain issue where you had shortages in 2021 and 2022. We know that used cars are selling for more than new cars, right, which is an anomaly. And that allowed Tesla, who was willing to cut corners on chips, CNBC did a spread on this, to have artificially high margins. Now their margins are regressing back towards the mean. Their operating margins were 24% in the first quarter of 2022. They were 9.6% last night, down from 11.8% in Q1. So it's just not the company that people thought it is. Their earnings profile is much lower, and they're still cutting prices. So that's the problem, and I think that's the story for Tesla in 2023.
Look, I mean, at this point, yes, the valuation certainly seems very high. The prices they cut, Ford has been cutting prices, but they are creeping a little back higher. Hatem, let's kick it off. What is it about Gordon, what he's been saying? I mean, we know that the factories, he said, Elon Musk said that in the third quarter, production may be down because they've been doing some factory upgrades. You really like what they've been doing in Berlin and Austin, for example. Hatem?
First of all, the margins are going down because Tesla is investing heavily in its growth. I think that you want a company that is a growth company to be investing and really creating new products and batteries and chips. They just filed in Berlin for a new plant that's going to manufacture over 1 million cars in Europe. So if you think about that, currently Berlin does, I don't know, 200,000 cars. So I think the growth potential there is really tremendous. And as far as what Gordon said about the chips, Tesla is also investing, they said, I think, over $1 billion in their dojo and their chip manufacturing. So from an AI perspective, it's probably the only company that really has a true AI or solution for self-driving car that is really sustainable and that will continue for a long time.
And so, Gordon, I know that you're not so trusting on the chips. You've also often said that you're not even a believer in the fact that they are making batteries. You don't believe really in the self-driving, right?
Well, they're making batteries, but everything they said at Battery Day, we now know is a farce. Listen, when people at Gerber Kawasaki don't have models, they don't understand what's going on. Tesla's other income was a $370 million benefit this quarter to the bottom line.
Has or doesn't have.
The quarter, they would have missed numbers. If you look above the other income line, their operating income was down 3% quarter over quarter, 10% year over year. Listen, this is no longer a growth company. It's an auto company. 86% of their revenues from selling cars, 98% of their gross profit from selling cars. What auto companies have to do is cut the price to move units. 2,000 auto companies, Warren Buffett made this point, 2,000 auto companies emerged in 1905. Nearly all of them went bankrupt. Right? Why? Because it's highly intensely competitive, high capital intensity, and Tesla is being shown to be an auto company. And no matter what Gerber Kawasaki says with respect to how great they love the company, margins are collapsing. They're going to continue to collapse. And the reason why they've produced more cars than they've sold now for a record 5 straight quarters in a row, and their production is going to be down in Q3 is because they have a demand problem. They're getting crushed in China, market share 30% to 11%. They're getting crushed in Europe, market share from 30% to 15%, and their market share is falling in the EU. And again, now that we don't have supply chain issues, they're suffering.
Okay. let me jump in here, because the first thing is I'm going to say is, how do you know what models Gerber Kawasaki has and does not have? That is you can't assume anything like that. However, I'll let that go and say, look, when you talk about market share, Hatem, there's no question that the competition has been increasing. Do you think that they can continue to be the leader that they are? Look, there are many people who think it's overvalued, but does $24 price target and a sell rating seem ridiculous to you?
Thank you for saying that, Nicole. I don't know what Gordon is talking about models. I don't think I need to showcase any kind of our models. But ultimately, what Gordon is looking at is completely wrong. What Tesla is trying to do is trying to go after the whole car market, not just the EV market, and that's only 6 or 7% currently of the 15 million cars that we sell in the United States, or 100 million globally. So if Tesla has 60% of that market, but that market itself is growing, so we don't need Tesla to have 70% of the whole market. So I think what's missing here is the fact that Tesla, the Model Y, has been really the top-selling car basically everywhere. So the growth story here is really just getting started, and they have the best battery technology. They have the best software, so they're really the top dog no matter how you look at it.
Okay. Gordon, Cybertruck is going to be produced in high volume next year. Final thoughts here, Gordon.
So we don't know if it's going to be produced in high volume, right? It's 3 years late. They were supposed to be producing high volume this year. Now they should have next year. But I just want to highlight something he said when he says they lead everywhere and they lead in batteries. That's just not true. They don't lead in China. That's BYD. They don't lead in Europe. That's VW. And now you have Ford and GM coming. With respect to, the final thoughts, look, Elon Musk is telling you they're going to produce less this quarter, right? That's a big problem. And he's telling you they're going to continue cutting prices, which they've done. You don't cut prices. Car Gurus has Tesla's prices down 35% over the past year. The average car is down 5%. GM's down 1%. Ford is up 1%. So they're cutting prices far much more than the competition. The reason is because people don't want to buy their cars. They have 1.67% share globally, 4.4% share in the U.S. This isn't a leader. They are a laggard.
Okay, you had to tell them about the margin that you were looking at, the ex-auto margin, quickly.
I mean, 18%. Come on, Gordon. What are you talking about, buddy? It's
gross margins of automakers. They sell direct to the customers, which means their discounts are in SG&A, whereas other automakers' discounts are in gross margins. Look at the operating margin. They are lagging.
Gordon, $24. $24. Come on, Gordon. $24.
It's going to get there. When it does, we'll have you on to say congrats.
Oh, come on. $24, Hatem?
I mean, it's silly. I mean, the company's doing $100 billion in sales and 18% margins. Come on.
Where's the real value of? Where should it really be, Hatem?
Listen, they're a software company. We haven't seen what the potential is of full self-driving. We haven't seen what the potential of this AI revolution. They're spending a lot of money in there. The Cybertruck, yes, they're not going to produce a lot of them, but this is going to be also another top product. I think they're going to sell hundreds of thousands of it. And ultimately, this will own 20% of the whole car market.
Okay, let's leave it right there. I like the bull bear debate. Thank you both very much. Hatem Dhiab, Gerber Kawasaki Wealth Investment Management, and Gordon Johnson, GLJ Research. Thank you both for being on today.